Reserve has left interest rates alone for the first time in more than a year.
This day coming as inflation drops to its lowest level since the pandemic. Our D.C. Bureau Chief Ben Kennedy is live at the White House following it all for us. Ben.
Well, Nicole and Calvin, what this means in the short term for interest rates when it comes to car and home loans, they will not go up, at least for now.
My colleagues and I.
Federal Reserve Chair Jerome Powell behind the podium Wednesday. It's there he announced they'll pause an interest rate hike.
Today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
It's the first time in more than a year the Fed left interest rates alone after raising them at the fastest pace in 4 decades.
Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go.
Good afternoon, everybody.
The White House touted the news as a sign that inflation may be on track to return to normal levels after the latest Consumer Price Index report shows inflation has been cut in half since last year's peak.
Our economy continues to show progress tackling inflation while unemployment remains at historic lows.
Her remarks as Special Assistant to the President for Economic Policy, Daniel Hornok, told Local 10 what this move by the Fed means for South Florida.
So we're seeing real progress on inflation, progress on gas prices and on grocery prices. And at the same time, we have one of the strongest labor markets in decades.
And again, the goal is to bring inflation down to 2%. And until that happens, the Fed does warn they could raise interest rates again later this year. Reporting live at the White House, Ben Kennedy, Local 10 News.